CAL Benchmarking Framework, Part 2 of 2. Special Report, CAL Benchmarking Framework, Part 2 of 2. In Part 1, we identified the Nasdaq-100 equal-weighted index, known as NDXE, as the closest structural benchmark for the cosmic algorithm. That is because both CAL and NDXE reduce the dominance of the largest Nasdaq-100 companies through equal weighting. In this second part, we turn to QQQ. QQQ answers a different question. It is the market cap-weighted exchange-traded fund that tracks the Nasdaq-100. It therefore shows how CAL compares with a return pattern generated by the index's largest companies. Before interpreting the charts, an important methodological point should be made. The datasets were not assembled in exactly the same way. The CAL and NDXE series use representative monthly values derived from a cash flow-adjusted reconstruction of annual eToro statements. The QQQ series uses aggregated month-end market data. For that reason, the purpose of this comparison is not to claim exact point-by-point equivalence. The focus is instead on the broad direction, timing, and shape of the trends since May 2021. All three series advanced after May 2021 and then weakened materially during 2022. This shows that CAL did not avoid the broader contraction in Nasdaq growth stocks. The comparison is more useful in showing how each approach behaved within the same difficult market environment. CAL and NDXE both fell below their May 2021 starting levels, with NDXE reaching the deeper trough. QQQ also moved into cumulative loss, although its decline appears somewhat less severe. That is consistent with QQQ's heavier exposure to the largest Nasdaq-100 companies. The scale, profitability, and balance sheet strength of those companies can provide relative resilience when weaker constituents fall more sharply. During 2023, all three trends recovered. CAL and NDXE moved back toward, and then above, their starting levels. QQQ also returned to positive cumulative territory. At that stage, the dashboard does not show a decisive structural advantage for CAL. The main point is that the strategy participated in the recovery. NDXE remained weaker because it continued allocating equally across the entire Nasdaq-100, including companies that were recovering more slowly. The important change appears from 2024 onward. CAL begins to separate materially from NDXE and also strengthens relative to QQQ. CAL's portfolio contains approximately 20 Nasdaq-100 stocks. Capital is allocated broadly equally across those selected companies, and the ranking process is refreshed each month. This structure can increase exposure to the strongest areas of market leadership. From 2024, those areas included semiconductors, artificial intelligence infrastructure, cybersecurity, and related growth industries. QQQ also benefited strongly from these themes, but through a different mechanism. Its gains were driven by market cap concentration in the largest Nasdaq-100 companies. CAL's advance therefore reflects selective concentration. QQQ's advance reflects index-level concentration in dominant mega-cap companies. The dashboard suggests that CAL and QQQ followed broadly comparable market cycles. Both experienced an advance after May 2021, a contraction during 2022, a recovery through 2023, and stronger growth from 2024. Their later paths are more similar to one another than either is to NDXE. However, CAL appears to accelerate more sharply during late 2025 and early 2026. A portfolio of approximately 20 stocks can give each selected leader a much larger effective weight than that company would receive in QQQ, unless it is already one of QQQ's largest holdings. That concentration can enhance gains when the ranking process identifies persistent market leadership. It can also produce sharper reversals when selected companies weaken. The visible pullbacks before later advances are therefore an important part of the interpretation. Each benchmark answers a different question. NDXE remains the better test of whether CAL's stock selection and monthly rotation add value beyond equal weighting alone. QQQ is the stronger reference for whether CAL is outperforming the investable, market cap-weighted Nasdaq-100 outcome that most investors recognize. Viewed together, the two benchmarks help separate two different effects. The CAL versus NDXE comparison highlights selection and rotation. The CAL versus QQQ comparison tests whether that active process adds value beyond simply owning the dominant Nasdaq 100 companies through a passive exchange-traded fund. The dashboard supports a trend-based conclusion rather than a precise audited return comparison. The series use different construction methods. The CAL values are representative and do not constitute a formal monthly time-weighted return record. Even with that limitation, the broad evidence indicates that CAL participated in the same major Nasdaq market regimes, recovered alongside QQQ, and then produced a stronger upward trajectory as concentrated monthly selection became more effective. This does not establish permanent outperformance. QQQ may lead when mega-cap concentration dominates market returns. CAL may lead when its ranking process captures a wider or changing group of strong Nasdaq 100 constituents. Current example holdings include Applied Materials, Palo Alto Networks, KLA Corporation, NVIDIA, and Lam Research. These holdings are examples only and are not recommendations. Past performance is not indicative of future results. Investing involves risk, including the possible loss of capital.